people need two basic questions answered, and in my experience, if they get these two questions answered, it takes away about 80% of the uncertainty when it comes to their financial future. Hi, Joel Johnson here, CEO of Johnson Brunetti. Many of you know me from my radio show or my TV programs and also our podcast. Today, we're going to talk about, in fact, we're going to break this down to really, really basic stuff. Now, don't tune out, because for most people, they get things way too complicated. People overcomplicate things in life, right? I mean, our kids overcomplicate things. Sometimes our parents overcomplicate things. Sometimes we do, or our friends do. They make a really simple decision way too complicated, and then you get overwhelmed and you can't move forward. So today, we go right back to the basics when it comes to what do most people want when it comes to their money. And what we've found is doing retirement planning for people, whether you're already retired or whether you're moving towards retirement, people need two basic questions answered. And in my experience, if they get these two questions answered, it takes away about 80% of the uncertainty when it comes to their financial future. What are the questions? Well, they're right here on the board. Number one, will I be okay? For most people, that means one of two things. Number one, am I going to have enough income to last for the rest of my life? Or people that are more well off, they answer kind of a different version of that question. What do you want? And they'll say, well, I want to make sure that my money can support the lifestyle I desire. But listen to those. There's a little subtlety in there, which is those are both basically the same answer. Will I be able to have income from my savings, from my investments, from my pension or 401k or annuities or Social Security so that I can maintain the lifestyle that I want, so I can hit those goals? So will I be okay? The first question. Second question is, well, okay, I've saved enough money. I know I'm going to be okay, but what rate of return do I need on that money? What rate of return, what interest rate, what return rate on my investments do I need to make sure I'm going to be okay? Because remember, any projection that goes out 20, 30, or 40 years to decide if you're not going to run out of money in retirement assumes a certain rate of return. Does it assume 0? Does it assume 4%? Does it assume 8%? Do you need 12%? If you need 12% to be okay, we've got a problem. You're going to have to maybe dial back on your expectations or possibly run out of money early, because it's very hard to get 12% over a long period of time when your emotions get in the way in the stock market or in any other type of business unless you're controlling that business. So, two questions you've got to answer. Number one, are you going to be okay? We help people answer that. Other financial advisors help people answer that all the time. They do income projections that will simply show you, do you have enough money based on a certain rate of return to last for the rest of your life? But again, pick up on that subtlety. There's a second part of that question is, if somebody's telling you you're going to be okay or you're not going to be okay, what rate of return are they assuming? And when we do an income analysis for somebody, sort of that future income program, where we take you through what rate of return do you need, have you saved enough money, and we analyze what could happen in an up and down market when the market's acting like a roller coaster, or what could happen if we just put all our money into something where we can get maybe a corporate bond where we get a guaranteed 3.5% over a 10 or 15 year period. How did those things, and again, the guarantee, by the way, there is from the corporation, not an ultimate guarantee. But how do those things factor in? So I want you to think about your situation, and if you know this, if you have high confidence in the fact that, are you going to be okay? Okay, can you say you're absolutely going to be okay based on the money you've saved, based on your future income? What about inflation? Have you factored that in? You know, what if what we can buy with $10,000 a month today costs $20,000 in the future? Have you factored that in? And again, a good income plan will factor all that in. So can you answer that question a yes? Okay? And if you can answer that question a yes, based on what? Based on what rate of return? Because a good financial advisor will tailor your investments to this rate of return. In fact, way too many so-called financial advisors or stockbrokers get so obsessed with what investments you own, and they help you get obsessed with what investments that you own, that they forget about the big picture. Are you going to be okay? What rate of return do you need? And I will tell you this, if we do this analysis and we find out to be okay, somebody only needs to get 4% rate of return, and another person needs to get an 8% rate of return, the investment strategies to get that, to make you okay, are going to be very different. Okay? This person doesn't have to take nearly as much risk as this person. This person, if you're counting on that 8% rate of return, you might outlive your money if that doesn't happen, or if the timing is wrong while you're taking out income. Or maybe we need to have a very tough conversation about what are ways to modify that spending. So very important you go through this exercise. We can help you go through this exercise. We're not the only ones. Other financial advisors can help you go through this exercise. But here is the key. You need to leave that meeting, when somebody helps you go through this, with a high degree of confidence, with less fear than you came in. I hear this all the time. Joel, we feel much better now than we did before we got here to your office. That's removing fear from someone's financial future and giving them confidence. Very hard to have absolutely 100% guaranteed certainty. It is possible, okay? But you can increase your confidence level by answering this question and figuring out what rate of return do you need to be okay. So this has been really short today. I know it's been basic. For some of you that are thinking, duh, that's real simple. Everybody knows that. Well, everybody knows it, but even really smart people mess this up because they get way too complicated. They start focusing on the wrong thing, especially when times are uncertain. So if you haven't had these two questions answered, we can help you answer those questions. If you have, great. If you're not ready now, that's okay too. In all this confusion that's going on and this uncertainty that's going on out there today, and all the noise in the media and the different information sources you've got coming to you, you've got to find a way to clarify things, and I would suggest you go back to the basics and make sure you've got these two questions answered.